All right, so we're diving deep today into the factors that could really shake up the crypto market.
Yeah, big time.
And I know, everyone's talking about the election tomorrow. I mean, who isn't? It's a nail-biter between President Biden and his challenger.
Absolutely.
But, to be honest with you, there's something else happening that I think could be even bigger, especially for Bitcoin.
You thinking what I'm thinking.
The FOMC, the Federal Open Market Committee meeting, happening right on the heels of the election, the 6th and 7th.
That's the one. And it might actually be more important for crypto than the election itself.
We're basing this deep dive on a couple of articles from Chaos of Money. One's called Beyond the Ballot, and the other, Navigating Bitcoin's Short-Term Price Movements.
Both really interesting reads.
They both kind of make the case for why we should be paying more attention to the FOMC than all the election buzz.
So think about it this way. Elections always bring uncertainty. Policy changes, new administrations, all that. And that definitely affects markets.
Right. Makes sense.
But crypto, and especially Bitcoin, tends to react more to the big macroeconomic picture, like global stuff, rather than what's happening politically in one country.
Yeah, you're right. Crypto always seems to have its own agenda.
Kind of, yeah. And this is where the FOMC comes in.
Yeah.
Because they basically control the levers of the U.S. economy.
Right.
And their decisions ripple outwards globally. And crypto feels those ripples.
So what are they going to do? What are those big economic levers telling them to do right now?
Well, some of the signals are, honestly, a little worrying. Job reports have been shaky lately, and there's this whole thing about a potential yield curve inversion.
Yeah, I've heard people talking about that.
It's enough to make even seasoned investors sweat a little. Basically, it happens when short-term interest rates on things like government bonds are higher than long-term rates.
Okay.
And historically, yeah, it's often been a sign that a recession might be coming.
So does that mean everyone's about to freak out and pull their money out of the market?
I wouldn't say freak out, but you're right. When investors start to feel unsure about the future, they often look for safer places to put their money, long-term stuff. And when those options don't look so good, well, it definitely sends a ripple of fear through the markets.
And that's where crypto comes in, right?
Oof, bingo. Because it's seen as a kind of safe haven, away from the chaos of traditional markets.
Especially Bitcoin. I mean, it's practically got digital gold stamped on it.
Exactly. So while everyone's glued to the election results next week, the FOMC will be making decisions that could set off some pretty big moves in the crypto market.
Interesting. And what are they expected to do? What's the prediction?
Actually, the word on the street is that they're probably going to cut interest rates.
Oh, really?
Yeah, most likely by about 25 basis points, which would bring the benchmark rate to somewhere between 4.5% and 4.75%.
Okay. But isn't a rate cut usually a good thing? Like, doesn't that stimulate the economy? And if the economy's doing well, wouldn't that be good for crypto too?
It sounds logical, right? But it's not always that simple. The reason they're probably cutting rates is because the economy is showing signs of slowing down.
So they're trying to give it a boost.
Exactly, to get people borrowing and spending more.
So it's more like they're giving us medicine because we're already sick, not to prevent us from getting sick.
That's a great way to put it. And here's the kicker. If you look back in time, rate cuts haven't always been the magic solution to prevent a recession.
Uh-oh. You got a history lesson for me. I love those.
Well, think back to 2008, the financial crisis. The Federal Reserve actually cut rates before the whole thing crashed.
Really?
Yeah, they were trying to stimulate things. But in the end, it wasn't enough to stop those underlying problems from exploding. So this rate cut might make the markets feel a little better in the short term, but it doesn't necessarily mean we're out of the woods.
That's a little unnerving. So what does all this mean for someone who's trying to figure out what to do with their crypto? Should they be buying, selling, holding on for dear life?
I think the main takeaway here is that we need to be paying attention to the economic signs, even more than the election results.
So be smart, do your research.
Exactly. Don't just go with your gut. Or rely on what you see in the headlines. You need to dig deeper and understand the data. What are the big indicators telling us? Things like yield curve inversions, gold prices, those job reports we were talking about. They're like whispers.
Whispers that tell you what's really going on.
Right. Beneath the surface.
That we've got to be detectives. Look for clues.
Exactly. And one of the most interesting clues right now is the price of gold.
Because gold is that classic safe haven asset. And it's been going up lately, right?
You got it. Investors tend to buy gold when they're feeling unsure. Remember what we said about Bitcoin?
Digital gold.
Ding, ding, bing. So if gold is doing well, it's logical to think that Bitcoin might follow suit.
Like they're both reacting to the same forces in the economy.
Exactly. But remember, that's just one piece of the puzzle. There's more to the story, like,
Oh, hold on. We're going to get to those other economic signals you need to be watching. But first, a quick break.
so yeah, we were just talking about gold and how it might be a clue for what Bitcoin's going to do. It's a good reminder that the economy's complicated.
Yeah, there's always a lot going on.
Exactly. You can't just focus on one or two things. Got to look beyond the surface.
You're telling me.
Don't get distracted by those flashy headlines. Got to understand what's really happening underneath it all. And that brings us to another signal that's been making people scratch their heads a bit: GDP growth.
You mean those reports that tell us how the overall economy's doing? I thought those were actually looking pretty decent lately.
Yeah, on the surface, sure. But Chaos of Money argues that a lot of that growth is coming from government spending, not so much from the private sector.
Oh, so it's like a temporary boost then.
Yeah,
Not necessarily a sign that things are really healthy in the long run.
that's the idea. It's the private sector, businesses, consumer spending that really drives sustainable growth. And if that's shaky, well, it could make investors even more interested in those alternative assets like crypto.
Because they're looking for something that feels more stable in uncertain times.
Exactly. And speaking of shaky foundations, there's another signal we've got to consider. Those recent job reports, they haven't exactly been painting a pretty picture of the employment landscape.
You're saying there are hints that the job market might be weakening? What does that have to do with crypto, though? Would people be less likely to invest if they're worried about their jobs?
Well, it's funny, actually. Chaos of Money points out that when the job market weakens, historically, people actually tend to get more interested in stuff like gold.
Because they want something safe to put their money in.
Exactly.
Yeah.
And what do we always say about Bitcoin?
It's like digital gold.
Right.
Bingo!
So, yeah, a weaker job market could actually push some investors toward crypto as a way to hedge against those risks.
So it's almost like the worse things get in the regular economy, the better it might be for Bitcoin.
It's not quite a direct correlation, but there's definitely something there, something worth paying attention to.
So we've got a lot to think about. The FOMC meeting, possible rate cuts, the whole recession thing, gold going up, and now signs of a weak job market.
Yeah.
My brain's doing backflips.
It's a lot to process, for sure, but that's why it's so important to have a system. A way to sort through the noise and figure out what it all means. That's what Chaos of Money is trying to do with these articles.
Help us make sense of it all. So what advice would you give to someone who's trying to figure out how to navigate all this and make some smart decisions about their crypto?
Well, the first rule is always the same. Stay informed.
That's a good one.
Don't just rely on what you see on Twitter or whatever. Do your research. Pay attention to the data. Look at those big economic indicators we were just talking about. Yield curve inversions, gold, the job numbers. They'll tell you a lot more than just reading the news.
So we've got to understand the bigger picture.
Exactly. And my second piece of advice: be patient.
Patience is a virtue, or so they say.
Don't make those impulsive short-term trades, especially not this week. Not with the election and the FOMC meeting. The markets could go haywire. And unless you're a professional trader, trying to time those swings is a recipe for disaster.
Like trying to ride a roller coaster blindfolded?
Pretty much. Think long-term. If you believe in Bitcoin and the reasons behind it, consider buying more during these dips, especially if the FOMC signals they're going to be more easygoing with those rate cuts.
So the old buy low, sell high strategy.
It's a classic for a reason.
Yeah.
But you got to do it strategically, not emotionally. Don't panic and sell just because things are down.
Yeah.
And don't get caught up in the hype and buy when everyone else is buying high.
So have a plan. Don't just react.
Exactly. Which brings us to another important point. Don't put all your eggs in one basket. Diversification is key.
Don't just invest in Bitcoin.
Right. Spread those investments around. Don't just think about crypto. Think about stocks, bonds, real estate, even stuff like gold.
So it's all about managing risk.
Exactly. And finally, keep your eye on the Federal Reserve, especially the FOMC.
Okay.
They're the ones who set monetary policy, and that affects everything: interest rates, inflation, and that in turn affects how people feel about investing and where they put their money.
So while everyone's freaking out about the election next week, we could stay ahead of the game by paying attention to what the Fed's doing.
Exactly. That's what this deep dive is all about: going beyond the surface, understanding what's really driving the markets.
It's about having a deeper understanding.
Exactly.
So with all this uncertainty, all this potential for things to go crazy this week, What's the one big takeaway you want our listener to remember?
I think the most important thing is to focus on the fundamentals.
What does that mean exactly?
Well, it means understanding why cryptocurrencies like Bitcoin have value. It means being aware of those big economic forces that are shaping the market. And it means having a long-term plan, one that's based on research and analysis, not on your emotions or what everyone else is doing.
Don't get swept up in the hype.
Exactly.
Well, I think this deep dive has given our listeners a lot to think about. We've gone beyond the headlines and really gotten into the nitty-gritty of what's going on in the crypto market.
And hopefully, with this knowledge, you can make some smarter choices about your investments.
Whether you're a crypto pro or just getting started, it's an exciting time to be in this space. But it's also a time to be thoughtful and strategic.
This world is constantly changing after all.
Stay curious, stay informed, and, as always, happy diving. Wow, we've really gone deep, haven't we? Election, FOMC, interest rates, yield curve, gold, GDP, even the job market. Phew.
It's all tangled up together, though, isn't it? It's fascinating how sensitive the crypto market is to, well, basically everything else, especially Bitcoin.
Chaos of money definitely hammers that point home.
Yeah, for sure. And it's a good lesson for anyone who's into crypto. Like, you can't just ignore what's happening in the rest of the world.
You had to see the whole board.
Exactly. So as we wrap this up, let's bring it back to our listeners. With all this talk of potential economic trouble ahead, those historical comparisons, the signals from gold and the job market, where does that leave Bitcoin? Is it really going to become this big safe haven asset like some people think?
That's the question everyone wants the answer to.
It is, and I don't think any of us have a crystal ball, unfortunately. But we can look at what we know. Bitcoin's held up pretty well through global uncertainty, right?
Yeah, it's been through a lot.
And big investors, institutions, they're getting more interested in it all the time. Plus that limited supply, that makes it a good hedge against inflation, potentially.
So it's got some of those classic safe haven qualities.
It does. But it's still pretty new on the scene, you know? Gotta remember, it can be really volatile.
So there are risks, just like with any investment.
Absolutely. That's why you gotta do your homework, understand those risks, and have a plan. An investment strategy.
Don't get caught up in the frenzy.
Exactly.
Well, I think this deep dive has given everyone a lot to think about. We've gone way past the headlines and really explored what makes the crypto market tick.
And hopefully now you can make some more informed decisions about where you put your money.
Whether you're a crypto whiz or just dipping your toes in, it's an exciting time. But it's also a time to be smart.
Strategic.
Yeah. This world moves fast.
Always changing.
So stay curious, stay informed, and as always, happy diving.